Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Okay guys, now we'll take a look again on the gold market as usual. So here we actually discussed recently the interesting performance. Just because, why it's interesting, it's just because it is breaking the normal price action of the bearish market. So if market already has shown the pullback reaction and starts the extension, it should, at least in theory, should complete at least the nearest standing target, which is the COP around 1850. But suddenly market had stopped showing the wash and rinse of these lows and starting the pullback. This opened way for reaction to the bulls. It's now take the lead and currently could try to extract some advantages from the recent action. For the bears, in turn, it means that they should sit on their hands and see what will happen with the current performance and actually what this performance is, what the factors are pushing gold currently to the upside. Yes, we could mention a lot of other things, starting from the statistics that we will get, coming the inflation data, personal expenditures data, non-farm payrolls release tomorrow. So lots of stuff, inflation as well in the European Union, but also some geopolitical moments. All this stuff are shaking the boat and support demand for safe havens. It might be also some rumors exist on the market concerning these gas payments in rubles or something of that sort, which also support the gold. Whatever it will be, currently, until market stands above these lows, the bulls control situation in the short term. And if you have the bearish view and you would like to go short, you will have to wait for the two things. Either the failure of this bullish setup and market dropping below these lows, which suggests that markets keep going to the next target and previous trend stands intact, or completion the upside target that might be with a greater upward action. So until this will happen, until you will get the solution in one or other way, it is really tricky to take the short position because it might be costly and market could easily show the acceleration against you, which would be, well, not very pleasant moment. So, for example, on the follow time frame chart, we do not exclude even the chance to get some kind of the double bottom or something of that sort. Yes, currently the overall action here stands not too fast, but existing of the wash and rinse, it is very typical, very often could be seen on the double bottom patterns. This is some kind of the typical thing for this pattern. And now we should just need to see what will happen on the slope of this action. So whether the market accelerates further and return back to the 1960. If this will happen, and the appearance of the double bottom might be very probable. So that's the things that we could keep an eye on. At the same time, if you trade on intraday charts, it's not necessary to you to wait when the market will definitely return back to 1960. You could try to trade all the process to the upside until market stands above these lows. So actually we talked about this recently as well. So we said if you'd like to go along, you could try to catch any retracement that will happen. Just control that market stay above these lows and preferably above the major 618 support on the hourly chart. So what the technical background of the possible action? First of all, we have, as I said, not quite reasonable downward action based on the patterns that we have. And this behavior with the wash and rinse is definitely a bullish sign. Second, we have the divergence that we already have mentioned recently. And now, guys, if you'll take a look at the cross-market analysis. So today in the Euro video, I already talked about this. First of all, in interest rates performance, you can see this minor pullback is starting on the 10-year Euro yield, which is also supportive for the gold and is negative for the dollar. And on the dollar itself, you also could see the bearish performance. This is weekly chart, and take a look that on this week we could get even the bearish reversal week, which suggests that further continuation might happen on the next week as well on the dollar. On the daily chart, you could see that something reversal is forming. It's kind of the, I don't know how to call it, some triple top or something of that sort, but it's definitely shows an ability of the market to keep going higher. So first fast acceleration, retracement, and final acceleration was already lower, slower, with a lot of different spikes. Here you can see it also has failed and market collapsed. So this is actually, by the nature of the price action, it reminds the double repo. Sometimes Judd Napoli tells that on some markets, especially in the treasury bonds, it's very often you could meet the even triple repos, where you don't have not the two crossing of the 3x3, but the 3 crossing of the 3x3. And probably that might be something that we have here. You can see, indeed, this some way. But well, I'm not want to call it and treat it in this way. But well, overall performance is definitely not bullish. That in turn also supports the idea on the gold market that it might go in higher. That's why, taking it all together on the hourly chart, you could see the market has completed the first confluence area that we have discussed recently, 37.35, at the first destination point. Now market stands in the retracement. If you would like to take the long position, currently it would be better to split entry in the two parts probably. First, you could try taking position right at the first level where it stands right now, 1920, because market could keep going right from these points as well. Second, if somehow we still get kind of the Gardner's triple to buy that we discussed recently. Yesterday I also talked about this pattern that might happen, because for the gold market it very often happens. Take a look for this upward action. This we trade previously. Upward rally, ABC retracement, upward continuation, triple to buy. So and this is a very typical pattern for the gold when it forms a V-shape reversal. So here you also could recognize minor head and shoulders, but we can't call it in this way because just two small shoulders exist. It would be better to treat it as a V-shaped reversal. In a V-shaped reversal, very often gold forms Gardner's triple to buys. That's why in the current circumstances, first entry might happen right here. You could try to take the position, but for the second part of the position, it would be wait for a deep retracement. If market dropped to the 1910 area, here you could try to take the rest. Or, if you're conservative, just wait for a deeper retracement here. Maybe it makes sense to consider the deeper pullback. It just saves your money because your stop should be below this area. So, that being said, bulls who trade on intraday charts could consider this current price action for position taking. Bears probably should sit on the hands until situation will be resolved, either with the breakout and erasing of this bullish performance and breakout below these lows, or completion of this bullish performance, for example, with some kind of the ABCD action back to 1960, or even completion the whole potential double bottom pattern. So that's our opinion currently on the gold market.